Hi, welcome to this channel. I want you to be rich. Today, I'm going to elaborate on what is value investing and what does Warren Buffett do that I analyze and I discover. And I'm going to use an example of one of the companies that he's following, and it's a very famous company as an example so that you can understand what is value investing. My name is Lee. I talk about money, personal finance, and investing. So for value investing is made famous by Warren Buffett, and in fact it was first made famous by his mentor called Benjamin Graham, who was a professor at Columbia University. So not many people know Warren Buffett changed his university just to become a student of Benjamin Graham, because Warren Buffett as a young man truly believed that if he follows Benjamin Graham and work with him, he's gonna learn the secrets of the stock market, which in fact we know today he did, because he's the third richest man in the world, and we have seen his company Berkshire Hathaway perform amazingly over time. I will include a link below of Google Finance where you can see how you can track the prices of a company, and the company we're going to look at today is Berkshire Hathaway, as a way to study and understand the concept of value investing. So I like to highlight 5 points today on what is value investing, so that you get a glimpse of what is value investing, and hopefully it helps you understand how you can invest. I personally use this method of investing, and there are also several disadvantages that I will want to highlight for you, that is not all a bed of roses. So the 5 things of value investing are to understand the business. Number 2, to invest for long term. Number 3, to evaluate the management. Number 4, to understand the cash flow. And number 5 is called the margin of safety. In this video of a short 10 minutes or so, I'm going to quickly run through with you the example, an actual real life example of what Warren Buffett did so well in, and what he failed, and what are some of his mistakes. And yes, even Warren Buffett made mistakes, and he immediately said so in his. Let's talk about number 1, understand the business. And this is truly something that I learned the hard way, and I learned it by losing money in the market. I don't want this to happen to you, because money is hard earned, and it's gonna sting and pains. It's gonna be very painful if you lose money in the market. Some people have even sworn off investing in the stock market. They went to unit trusts or mutual funds, which also lose money, but it's just that someone else is losing the money for you. So you want to take some control and understand how you're investing, or it could be that you're in charge of your own retirement plan and you're investing your 401k or Roth IRA. Understanding what this great guy Warren Buffett and Charlie Munger did with Berkshire Hathaway investment. Also because every day we're consuming what he owns, and if you can own a piece of what you're consuming, it's very helpful. Understanding the business. Take for example, they invested in Coca-Cola, in Razer, in Apple. And let's say for example Apple, understanding the business. I personally use an Apple phone, an iPhone, and then I started seeing my friends who were in small business using MacBook, and I asked them why did they decide to switch from Microsoft Windows to a MacBook, and from like a Lenovo laptop or IBM laptop to a MacBook, because it seems like I have to learn everything again. And their reason is because MacBook makes everything very simple for them. There is no antivirus that they have to wait 10 minutes for the laptop to start. There is no more upgrading of program all the time that disturbs their business. There's a lot of free templates on Mac that they could use to do their business. So basically, MacBook allows them to focus on their business. And so as a business owner, I decided to get a MacBook as well, and I never looked back. And I see more and more business getting MacBook, because Windows just didn't satisfy a lot of corporate user as well. And I see people switching to iPhone from Android, because it's so much easier to transfer your data, and the security is good, the app store is good. Because initially I thought, who is going to pay 99 cents for music when you can download it for free? And the thing is that you realize more and more people are using iPhones. So going back to point number 1, which is very important in understanding a business, is that is the business selling products and services that are sticky? Are there more and more users? Are you personally a user of an Apple product? And I am, and I see lots of people around the world, old and young, using Apple products. And we're not even talking about people who are 70, 80, 90 years old. So this market are not captured yet. We're not even talking about the middle class in, say, India or a lot of developing countries. They're not using iPhone yet because it's still very expensive. They're still using Oppo, Huawei, or Mi. So Apple, just by reaching the American market itself, has really reached out to a lot of customers. And so understanding the business means that, do you use the product? Do you understand why people buy it? Are they acquiring more customers? Is this a sticky product? Yes, it is, because Apple is really selling a product. And if you walk into their shop, it's an experience. The people understand the product. You could take your iPhone into any Apple shop and they will service it for you. So, and they also have a amazing ecosystem, the App Store. So if you need to download any app for any productivity tools, the App Store is there. And because the App Store supports small business making apps for them. So if you are an app maker, Apple is going to provide you with a lot of support to be in their ecosystem. And because it's a paid app, whether it's 99 cents or $3.99, it's very easy to pay Apple. You just need to tap your finger or just punch in some numbers. You're gonna pay Apple. So the business makes it very easy to collect money from you. And it makes it pain-free, and they just send you a receipt. You don't have to go somewhere, download their software, register. It just appears like that. So by understanding the business, and I also mean, are you a user of the business or services? Did you like it? Did you enjoy it as a customer? That really helps you understand the stock. So if you see the portfolio, and I include a link below of Berkshire Hathaway, Warren Buffett and Charlie Munger running the company, their portfolio now includes about 49% of Apple shares. And you want to know why? Because number one, understanding the business. Apple makes it easy for you to buy their product. Apple makes it easy for you to do whatever you want to do and focus on your work by using their product. So it's not about the iPhone, but the fact that you can do so many things with your iPhone. Number three, Apple makes it so easy to collect your money. You know, you could do Apple Pay, you could just tap your finger, you could do a lot of things, and you can buy something on their App Store. So think about understanding the business. Whether are you a user? Is it easy? Is it like there's no friction and it's smooth? Number two is to invest in the long term. So Warren Buffett advocates that you are a business partner of the shares that you're buying. So when you buy a share on New York Stock Exchange, you're not just a person who bought the share. You are an owner of the company, an owner of the business. You're partnering the business. So you're not trading it up and down, whether the shares price go up or down or interest rate go up or down. You're partnering the business selling iPhone now because you bought Apple shares. So when Apple sells an iPhone, you're selling the iPhone. And so you're participating in the business. So think of it in the long term, and a lot of people say the rule of thumb is 5 years, invest for the long term. Number three is to evaluate the management. And this is something I learned the hard way. Management and their culture is very important. Invest only in American companies because it has gone through a history of regulations and ups and downs. So the level of due diligence and the level of scrutiny on the financial statements means that when an American business listed on the New York Stock Exchange made money in the company, it's going to come back to the shareholder in terms of share price going up or a dividend. So you want to invest in a good American company like Apple or Razer because the management meant that the money they earn really comes back to the little shareholder like you, shareholder with very little power, but you can still vote the management out because the management is an American company, headquartered in America, and that's very important because the S&P 500 American companies have performed very well over time. For me, there's personally no need to look outside of good American companies. And American companies have international outreach. They're selling everywhere in the world. iPhone is selling in China. iPhone is selling in India. iPhone is selling in Australia. Just by investing in a good American company, you are well taken care of. You really don't need to look at very risky assets in, say, China, India, or anywhere else, because unless you're such a big, portfolio or fund and you want to diverse. Number 3 is evaluate the management. So we talked about. Number 4 is cash flow. And this may sound a little bit technical for some of you, but it's very easy. Just look at Apple. Do they have subscription? Like Costco. Costco has a subscription service. So every year they start with very good cash. And a company with good cash is like blood for our body. You need very good flow of money. And Apple has what? iCloud, App Store, Apple TV. And there is a lot more, and now Apple is talking about subscription services for hardware like iPhone. So you subscribe and they give you an iPhone every 2 years or 1 year. And they have Apple Care. So all these services give them cash up front. So when you subscribe for iCloud storage, it gives you storage, and they get $14 or $7 up front from everybody. And that is good money. That is cash flow. And also cash. Apple has $2 trillion of cash, and that brings me to the last point, which is the margin of safety. Margin of safety for me meant 2 things. Number 1 is that you bought the share at a good price. So if you buy Apple shares at this peak and you keep it for very long, maybe you make money. But if you buy it at a market panic when prices are down, and you value it against their assets, so how much assets it has, how much cash is bringing in, how much customer it has, put it against the share price, so debt to equity ratio, for example, how much debt it has and how much equity, meaning how much assets it has, and measure it, and there's your margin of safety. And number 2 is how much cash it has, because that means you're buying a piece of that cash reserve. If Apple has $2 trillion, which I'll include the financial statement below, that is a lot of cushioning. So they can literally lose money on a product, say for example a recall. Maybe Apple phone started burning up or melt or have some customer complain. They can lose a lot of money before they even go bankrupt. And they can invest a lot in recalls or warranty because they have $2 trillion to make use of. Ask yourself, what kind of company are you buying? Does it have a cash reserve? Does it have good margin of safety? So the 5 points are: understand the business, invest for the long term, evaluate the management, ask yourself who is there. Is Tim Cook there? Is Steve Jobs there? Are they good American companies with a culture of due diligence, corporate ethics? Number 4 is cash flow. How much cash flow are they attracting? Number 5 is margin of safety. So you don't want a company that sells a product once and they don't sell you anything more. Apple sells you the iPhone, they sell you Apple Care, they then sell you iCloud, they then sell you music from the App Store, and then now they're talking about hardware subscription. So they really keep selling you a lot of things. Even though it's a small amount, they have outreach. So think of this aspect of business cash flow when you're buying into a business, when you're buying a share. And then I want to quickly touch on what are the disadvantages of value investing. I want to quickly touch on the disadvantages of value investing. Number 1, you got to do it long term, so 5 years or more. So you don't see your money come back to you immediately. It's not like day trading. Number 2, you need capital. You need money to invest. So $35 a week, every week, put it into the brokerage account. By the age of 58, you should have $1 million. And you can check that on my other video. And number 3, even if you invest in the right company, even Warren Buffett made mistakes. Warren Buffett invested in, for example, IBM, and he lost money. So it's not a value investing is not a sure thing. And number 4, you can miss a lot of growth opportunity. Like Warren Buffett didn't invest in Amazon, he didn't invest in Google, he didn't invest Apple at the start because he felt like this is not in his circle of competence. And this company grew a lot. So by not investing in early, risky startups when Amazon was still not making money, you literally miss a company that went up a lot. But high returns, high risk, so it depends on what you want. A lot of these high growth companies died out. Like Tesla could have just collapsed because they made rockets and or they make cars that couldn't work, couldn't get a batteries. But obviously Tesla now makes a lot of money. But what he's trying to say is that you want to invest in a company that's already stable, already making money, already making it. So you miss the growth part of it. So you miss like a 400% increase, but you get a return of 10-20% a year. According to Warren Buffett, he makes average 20% over time. So there are days where he have a dip of -30, but the thing is that he invests in companies that have already made it. But that also means that you missed out on growth companies. So think about value investing. Tell me what you think about value investing. And I recommend you read the book about Warren Buffett. I included the link below. I included links on the balance sheets and financial statements and annual report of Berkshire Hathaway. I also included a link of Apple below. I hope this educational video helps you understand what's value investing. If you like this video, please subscribe.